What's up, babes? Even after making it through the retail meltdown brought on by the pandemic, we're still seeing Square busting massive growth, and they just keep showing us new tricks. After showing us not only record revenues and operating incomes, Square's boosting their fundamentals by continually providing value for their users, boosting their number of monthly active users as well as gross payment volumes too. With all the fuss in the news lately about the Fed tapering and how that's going to impact asset prices and inflation, some people have been looking to banking stocks as a bastion of hope in the fight against inflation. But many are preferring to make the leap past banks over to stocks like Affirm, Square, or PayPal. Companies that are looking to break the traditional banks by leveraging the massive, overarching technological, cultural, and economic shifts towards software-centered banking. Now, all of that isn't necessarily all that meets the eye, so I want to revisit Square, as it's a company I've been in and out of over the years, and one that by many measures probably still has plenty of room to run at its current stock price as well. Speaking of valuations, one of the comments I regularly get from people in this comment section is,
Apple stock way too big, and it's way too overvalued. Why you invested in them?
While Apple used to be a much bigger position in my portfolio, one of the undeniable truths about Apple is that they've set up a really comfortable walled garden. Once you get an iPad or an iPhone, it's easier to see the value in their other products like MacBooks, iMacs, watches, AirPods, and their service bundles like music, TV, fitness, and all that. And that combination of the services that continually boost the value of all of the other products, providing synergistic benefits, is why you end up with so many Apple fanboys who basically find value in the products regardless of the price tag, and they don't even care about getting out of the walled garden. And actually, even if they wanted to, it would be a really big task that ends up keeping them in that walled garden too. And though it's not apples to apples, and they operate in completely different markets, I think we're starting to see Square pull off something really similar, where services and products provide so much value that users are starting to happily allow Square to become more and more central to their lives, which is reflected in the number of monthly active users and increasing ARPUs as well, both on the seller side or small retail shops who started with Square to handle their payment processing, as well as on the Cash App side for people who want to manage their finances on their phone. If you're new here, welcome to Benevolent Investors, where our aim is to grow our investment portfolio skillfully so that we can turn around and give generously to those around us in need. My name is Trey McKee. So if you're completely unfamiliar with what kinds of products Square's offers, go ahead and check out my earlier video up here. So on top of all of their existing products and services, we saw recently that they dropped $29 billion to buy Australian buy now, pay later provider Afterpay. There's been a lot of hype around this payment method, as well as a stock called Affirm, which has been showing gains bigger than Mark McGuire on performance enhancers in the last couple of months, jumping from like $60 up to nearly $150. The thing that's so attractive about buy now, pay later, or BNPL payment methods, is that essentially it just lowers the bar to making larger sales. Sellers typically report an 85% increase in orders after installing BNPL payment methods like Affirm, which basically makes it a lot easier for shoppers to buy big ticket items. And in Square's case, picking up Afterpay has similar benefits, but even more synergistic benefits that kind of pool into and connect with all the other different things Square's already doing. Afterpay is already connected with more than 100,000 merchants and has served more than 16 million shoppers, making it one of, if not the largest BNPL provider in the world. The business model not only provides value for the merchants who share a portion of their revenues with Afterpay, but also offers a shopping mall for users to look around at various merchants as well, which ends up being a win-win for both the shoppers and the retailers. And the number of merchants is growing at something like 100% year over year as well. As a small shop, when you see your competitors starting to make huge revenues, huge sales because of buy now, pay later, sooner or later you're going to have to get on board too. Square also says, despite the all-stock $29 billion price tag, that the deal will be immediately accretive to growth and gross profits, though it will result in a small decline in adjusted operating margins for a couple of calendar years as well. While Afterpay's underlying sales figures have been growing, like most newer business models, they're still not massively profitable as they churn revenues back into growth. They mentioned here that their EBITDA was actually down year over year at the end of 2020, mostly due to learning how to more accurately deal with bad debts and forecasting those bad debts. But going back to Square providing value for its users, they're expecting this deal to boost ARPUs by a scrumdiddlyumptious $32. And zooming back out to Square's overall business, We know they're targeting banks and looking to revolutionize the way the world uses and moves and invests their money. One jaw-dropping stat that I heard earlier, I think it was from Kathy Wood, was that mobile payments in China between 2014 and 2018 grew by 26x. Between cell phones and smart software like Square, traditional banking methods are going to become obsolete. That being said, there has been a much larger portion of China that has been unbanked up until now, making that number, easier to scale. And also the way rules are enforced and rolled out in China differs massively from the West. But I think that trend, nevertheless, is going to continue in the West as well. Another note, especially when we're comparing to traditional banks, is that Square's cost of acquiring customers is like a fraction of what it normally costs banks to acquire customers. Square spends about $20 to get a new client, while banks spend anywhere between $300 and $1,500. Good luck keeping up with that. And on that same line of thinking, the number of people investing using their Square Cash App is up 3x what it was in 2019 to 4.5 million users, which is more than 10% of their monthly active transacting customers, which is like around 40 million, I think, right now. So it's not just you receiving your paycheck and doing some shopping on Square, taking advantage of things like boosts, which are basically coupons you can use at Square retailers, but more and more people are starting to invest in both securities and cryptos. I'll get into cryptos here in a minute because the number can be a bit deceptive, but check out this chart. Check out this chart. I always say chart. Check out this chart showing the number of weekly average users increasing as well. The light green is monthly active users, but this chart shows us that the people who are using the app are starting to use it more frequently. And we know that the more frequently someone transacts using the app, the more money Square is going to make. And while we're seeing the number of weekly active users increase, it's safe to expect that the Cash App is going to become a more and more central part of the users' financial lives, making it harder for them to use other apps for, say, like shopping or investing or crypto or whatever. On the retailer side of the equation, we're going to be seeing retailers who choose to use the Square app for their shops making more money thanks to Afterpay, but retailers are also turning to Square more and more for assistance in things like payroll management, loans, customer acquisition, automatic savings plans, and there are like all these other benefits. Now, you probably already know this, but stores like Amazon or Costco have a really good idea of what kind of person you are based on what you buy. They can then make recommendations based on your shopping history and even predict what you're going to need and when. Now, take all of that and multiply it by 10 if the customer's using Square to receive their paycheck, then invest in shop and manage all of their money, all within the Square app. And then multiply that by a few more degrees if those users are shopping at stores that are powered by Square too. It's that virtuous cycle, that flywheel effect that just like births more and more awesome results for everybody who gets involved with it. Now, a new earnings report is coming out in about a month, but as of their last earnings report, we were seeing gross profits up 91% year over year to 1.14 billion. And up 57% over the last 2 years on a compound annual growth rate basis. Additionally, subscription and service-based revenues were up 98% year over year, with a gross profit of, get this, 561 million, up 90% year over year. This worked out to a massive EBITDA gain that went from 98 million up to 360 million year over year. So while we're seeing big growth happening even before this whole Afterpay discussion, imagine how things are going to change once the acquisition has finally kicked in. For a more graphical presentation of these overall numbers, check out this hyperchart, which, by the way, if you find interesting, please click on the affiliate link in the description below to check out their service. Revenues aren't at all-time highs, but operating incomes are, and that's what we like to see. Besides the Afterpay deal, there are a lot of other expenses we do need to take care of. One of the numbers a lot of people tend to get hyped about with Square is massively growing revenue numbers like we see on this chart. But break them down into sections and be careful to realize that Bitcoin makes up a massive portion of that, as we see here in the green. As cryptos have been booming in accessibility and usability, many are choosing to turn to them as a hedge against inflation. And I think that's one of the reasons we've been seeing Bitcoin kind of trending upwards recently. But the thing we need to be careful about as investors is that the gross profit on Square's Bitcoin revenues work out to be only like 2%. So no matter how huge you see that green bar getting, remember that we're only going to get 2% of that number. So take any revenue figures you see with a massive grain of salt. That being said, we are seeing net incomes finally starting to show some more regular gains as this hyperchart shows. Net income showed up at $204 million, but when you subtract the $77 million gain from their DoorDash investment sale and $45 million loss related to the impairment of Bitcoin investments, it worked out to $173 million, which is still hugely up from the last quarter, which is encouraging. But again, on the Bitcoin, as Bitcoin ownership and transactions increase in frequency, Square will become more susceptible to the fluctuations in the Bitcoin price. So while we're seeing a lot of these numbers and figures looking great, we do need to remember that Square is always in the habit of diluting stocks, which they use for powering the Afterpay purchase. They did also launch a $2 billion senior note offering in May to boost their cash position too, which by the way, sits at a healthy $6.6 billion now. So it's clear that Square knows they're going to keep growing if they're this comfortable always, creating more stocks. Looking forward, Square's a bit more confident in making super duper long predictions for their financials than like almost any other company I've looked at. Square themselves has for some reason decided to forecast their own gross profits staying at around 23% each year until 2035. Yeah, you heard me right, 2035, with EBITDAs at roughly 26%, where they would then start to slow down. But these numbers are all for Square as a standalone package and not including the Afterpay acquisitions calculated in. In the past, in 2017, they did announce that EBITDAs would be like 35 or 40%, so this is like a pretty significant pullback from that. However, with the inclusion of Afterpay factored in, Square's estimates from 2024 to 2030 show an estimated EBITDA as a percentage of gross profit, settling down at about 41% eventually. But the synergy is going to take years to kick in because of all the capital required to integrate, possibly netting a negative levered free cash flow until around 2027, when things turn around and project upwards. We are also seeing Square making bigger moves into the Spanish, French, Canadian, Japanese markets, and I think a number of other countries as well. Here in Japan, they're still only targeting the retailer side of things, probably because doing anything with banks legally in Japan is notoriously difficult, especially for foreign companies. Citibank, or as we say in Japanese, Shiti Bank, ended up having to pull out of the country a few years ago because of it. Square's also made a recent partnership with everyone's favorite social media platform, TikTok, starting the TikTok for Business platform, where users can now quickly and easily set up a free, fully integrated Square online presence to start selling immediately. Though I absolutely abhor TikTok for countless innumerable reasons, seeing Square tap into that rapidly growing market is sure to yield juicy results. So switching gears into valuation, traditional discounted cash flow models aren't really hyper accurate. They're not really designed for dealing with like young, really rapidly growing companies, let alone ones that are wheeling and dealing for acquisitions like Square is. But when you take a look at a lot of the street estimates, people are pretty hyped up about Square right now, especially at this price. Out of nearly 40 analysts, we're seeing estimated price targets with as low as 150 and as high as 375, with a mean price of just under 300. The current price is chilling around 242, but since there have been a number of notable public upgrades in the last couple of weeks, we've started to see the price climb a little bit. In my own valuation breakdowns, I'm a bit more comfortable aiming for like 280 to 290 in the coming quarters, but I'd be happy if it grew faster than that. We've seen Square make really, really rapid moves up and down in the past too. So like I've said in the past, I feel like Square is just one of those stocks that's smart to pick up occasionally here and there. It's like a Tesla or an Nvidia, where they're huge and they're changing the world and everybody knows that, so it's already reflected in their valuation. And therefore it's not appealing to a certain, segment of investors. And because of that, the standard analysis measures like PE ratios or EV/EBITDAs aren't going to be tremendously helpful either. Traditional value investors will obviously be turned off, but if you're in the mode of long-term industry-shattering innovation and you can hold up through the ups and downs, Square might be the right pick for you. But if you're hoping to get in on the ground floor of the buy now, pay later marketplace kind of revolution, which by the way only makes up like 2% of all current market transactions, and you're wanting to get into banking without, getting into banking as a hedge against inflation, while simultaneously taking a piece of the growing Bitcoin pie, which also kind of hedges against inflation, while capitalizing on traditionally strong fourth quarter retail sales, particularly after a really rough last year and a half, might be a good time to consider Square. I've been adding to my position and will probably continue to be adding to it over the years. If you're following Square, you need to learn about the multiplicative benefits of their Credit Karma acquisition, so click on this video here. Love you guys, and don't forget to stay generous.